Joining us now to talk about the IPO and the rationale behind the call to subscribe is Amit Jeswani, founder of Stallion Asset Management. In a bit, we'll also get in Siddhartha Khemka of Motilal Oswal. Amit, good having you. Thanks much for joining in. Very interesting that you say that instead of putting the money in HDFC mutual fund, or any fund for that matter, go out and buy the stock of HDFC AMC. What's the rationale behind buying a company which has that HDFC brand name, but arguably is more expensive than the currently listed AMC and will only get more expensive once the listing happens if the grey market premium is to be believed?
Hi Neeraj. The thing with these companies are these are very high quality assets. So on my blog I had written this part that there are only few businesses in the world which work on brand equity. So they don't need working capital or fixed assets to grow. I gave an example of HUL. HUL had fixed assets of 1500 crores in the year 2008, and that in the next 10 years that 1500 crores of assets have generated 42,000 crores of PAT. That's a lot of money. These companies are free cash flow machines. The opportunity size is huge, and you want to bet a leader in that big opportunity size. HDFC HDFC is the right bet. I think it's a secular 15% growth story. Obviously there'll be cyclical ups and downturns with market conditions, but 10 years from today I'm very convinced that the profits of this company will go up 5-6 times. The total profit pool of the mutual fund industry in India is just 4,000 crores. If you think about it, that's like $500-600 million. Just one hedge fund in the US market this year made a profit of $1.7 billion. This is not even the biggest hedge fund in the US. It's a mid-size hedge fund in the US. So the opportunity size in the next 5-10 years is huge. You're buying a shark in the ocean. You just buy and hold it for a long time. As far as the valuations go, IIFL Wealth, the deal happened of IIFL Wealth 1 month back, and IIFL Wealth was valued at about 15,000 crores. That is, and it made a profit of 400 crores. So that's about 40 times. So there is no reason why HDFC AMC will not get 40 times valuation. The IPO is coming at 32 times, but I believe it will open 300-400 rupees higher. And yeah, there's so much scarcity, like 2,800 crores of float for an HDFC. A few big buys and you won't get stock. So it's gonna be like a premium issue. That same things happened with HDFC Standard Life Insurance. I expect a repeat happening with HDFC AMC as well.
Interesting, Amit. So then my follow-up question is: does this argument go on to the AMC industry by and large? There are arguably 2 directly listed AMCs and then a couple which are indirectly listed. You could argue that some part of valuation ascribed to Motilal Oswal as a stock is also in part due to the AMC business that they have. Does this argument of the profit pool and the window of opportunity, or the size of opportunity, and the fact that the profit pool for the industry at large is just so low compared to what the global markets have, and at some point of time India could go there, does this argument extend to the entire space, or are you picking and choosing? Are you betting all your eggs on one basket, which is HDFC?
So all 3 of them are good companies. So HDFC, Motilal Oswal, and Reliance Nippon. The problem with Reliance Nippon is it's not the best quality management. Like, think about it. Someone just asked me the other day that Nippon is there, so what if Anil Ambani doesn't have a great track record? Nippon is there. So I reminded them that Reliance Nippon Life Insurance in 2008 had a market share of 7%. Like, the life insurance market share of Reliance Nippon Life was 7%, not the asset management company, the life insurance company in 2008. Today, the market share of Reliance Life Insurance is just 1%. Okay. At the same time, HDFC's market share has gone up 3 times. So, when you bet for 5-10 years, you want to bet on undeniable, unquestionable high quality managements. And, like Nariman Point will be Nariman Point and Dharavi will be Dharavi. So that's going to be the case with the valuations of these two companies, I think. As far as Motilal Oswal AMC goes, I am a super big fan of Motilal Oswal AMC. I wish I could buy the AMC business alone, but if you buy the AMC business, you also have to buy Aspire. And I think they are, like Aspire is the housing finance unit. I think things are not going good there, and you will see a large spike in NPA. So, you know, as Bharat Shah of ASK once told me, that when you have a gruesome business and a good business, the markets give you the valuation of the gruesome business, and that's the reason I'm not able to buy Motilal Oswal. But at some day, you know, I think I would buy Motilal Oswal. It's a great asset, great management, and yes, so we're very bullish. Actually, our largest holding is also a stock which is in the financial services space. So that's there. See, these are great businesses in India. The profit pool, see, in the financial part is divided in three parts: lending, protection, and investing. The protection and investing is just getting started. The total profit pool of your top three insurance companies, SBI Life, HDFC Life, and which is the third one? ICICI Prudential. The total profit pool is just 3,300 crores.
Yeah, I get your point.
Yeah, so the total profit pool is so small of these insurance plays.
I take on board the point, and which is where I want even the next guest to come in. I mean, I've completely in sync with your argument about the fact that the size of the opportunity is very high. The question mark only is if valuations are coming at a bit of a steep price. Now, compared to the listed entity, maybe they are, but as the guest pointed in the morning, compared to global peers, HDFC is probably coming in line with what the global peers are, and maybe that makes it a good bet. Siddhartha Khemka, what are your thoughts here? He's, of course, the Vice President and Head of Research at Motilal Oswal, joining us on the show. Siddhartha, what's your thought here? HDFC AMC, is your call a subscribe, and if so, is it a subscribe only on HDFC AMC as an individual one, or are you bullish on this space and large, and therefore you would have a bullish view on almost all of the listed names?
Yeah, good morning, Neeraj. Yes, so the two parts of the question that you asked. One is on the HDFC AMC. Yes, we have a subscribe rating, and that has to do with the pedigree of the management, the brand that they have built over the years. That reflects in the business, in the financials that they have got. So they have the highest market share in equity AUM, the most profitable AMC by far, and you have seen is among gaining market share consistently. So that's the call on HDFC AMC. On the overall AMC business, yes, it's a business which is growing, which is something that is picking up fast, and got impetus recently. Last 2 years we saw the strong growth in the domestic AMC business, basically the mutual funds, where the financialization of savings have started picking up. So that is where the story lies as to the penetration of mutual funds right now. I think is just about 5% and has a huge runway ahead. So in that, as the previous guest highlighted, I think Amit was saying that you pick the best one. So right now we had only one direct AMC listed available, but which was losing market share. Profitability was not as good as the others. So we are now getting just the second direct listed opportunity in the AMC business, given
therefore my question, and to both of you would be, and Siddhartha, to you first. For somebody who's got an investment in Reliance Nippon Asset Management, because when the IPO came out, the argument was that the space is growing, you don't have any other option, go out and buy it, even if you didn't quite agree with the valuations. Now my question is, for somebody who has an investment in RNAM, would you go out as far as recommending that if you had limited capital, go out, sell that money that you have in Reliance Nippon Asset Management, the business, and invest that for the HDFC AMC business? Would you do that, Siddhartha?
So right now it looks like I would try my luck in the IPO. Given the small size of the IPO, it looks like that the allocation would be very difficult. I would not go away and straight away sell my stake in RNAM, so to say. We don't have a rating on that stock as of now. But I would be looking at the market once the stock gets listed. Any opportunity, I would like to stagger my investments and gradually shift from an RNAM to a HDFC. Having said that, right now, as I said, I was telling you that this is just the second listed player, and because of that, it is getting a huge scarcity premium. And if you see, most of the market participants are willing to give that premium right now. As and when the others, better players like iPru, SBI, Birla, they get listed, maybe that scarcity premium will come down. Nonetheless, till that time, the growth is there. But I would definitely put all my, at least in this space, especially in the HDFC AMC, all my money in HDFC AMC.
Very interesting. Amit, that's the question then, right? RNAM benefited in part also because of the scarcity premium that still persists, and HDFC, aside of the fact that it's a great company, will also benefit from the scarcity premium. What happens when the others start getting listed? Because we're looking at the numbers, the revenue growth numbers, the net profit growth numbers, the AUM growth for HDFC are not bad. For ICICI AMC, they're just spectacular. What happens then? I mean, for an investor, I know it's too far out, we don't even know when it will happen, but my question to you is more this, that are you buying HDFC because of the scarcity premium attached to it as well, and will that go away once the other players come to the fore? Or by itself, you are happy buying and holding HDFC AMC stock for the next 10 years, irrespective of what else gets listed going ahead?
See, it depends on the valuation. If HDFC Life gets, AMC gets listed at 2,000 rupees or 1,800, see, it's possible. There's going to be a lot of scarcity premium. So the current grey market prices are 450. So we're already looking at 1,550. That's what the grey market is indicating. So a listing around 1,600-1,700 bucks is possible. And once the listing happens, I believe people will say that HDFC AMC is at 40p, 45p, Reliance AMC is at 25p, and probably the difference will reduce. But you have to get into the best quality ones. ICICI is number one. If I was an investor, for me the preference would be ICICI, HDFC and Motilal. So Motilal, like only the AMC business I'm speaking about. These are my top three ones, and these are the ones which will do well. But yes, in the long term, at some point of time, I will sell out my Reliance Nippon and get to HDFC. And I would play a basket approach here with ICICI, HDFC, Motilal, three players.
Chairman, I wish we can go on with this. On purpose, I didn't talk about the financials because it's irrelevant. We all know that the issue will get subscribed. The question mark only was, what should an investor behavior be like? Yes, go out and subscribe, because almost everybody said a subscribe. The premium seems to suggest that you will make money even on listing, forget over the next 10 years. I just wanted to get a sense from you as to how would you approach this space, not just now, but over the next 5 years. Thank you so much for taking your valuable time out and speaking to us today. Siddhartha, Khemka, as well as Amit Jeswani. Good having you.